I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. Why Does the Stock Market Go Up? By Brian Feroldi is a must-read for anyone who wants to understand the inner workings of the stock market. This book is written in a simple and engaging way that makes it accessible to both novice and experienced investors. Feroldi starts by providing an overview of the stock market and its history. He explains how the market has evolved over time and how it has become an essential part of our economy. He also covers the different types of stocks and the various investment vehicles available to investors. The book then delves into the factors that influence the stock market. Feroldi discusses economic indicators, such as interest rates, inflation, and GDP, and how they impact the market. He also talks about market psychology and how emotions, such as fear and greed, can drive stock prices up or down. One of the strengths of the book is Feroldi's ability to explain complex financial concepts in simple terms. He uses real-world examples to illustrate his points and provides clear explanations of key terms and concepts. This makes it easy for readers to follow along and understand the material. The book also covers the role of different players in the stock market, such as brokers, financial advisors, and fund managers. Feroldi discusses the pros and cons of working with each type of professional and provides tips on how to choose the right one for your investment goals. Another great feature of the book is the author's emphasis on the importance of diversification. Feroldi stresses the need for investors to have a well-diversified portfolio and provides guidance on how to achieve this. Overall, Why Does the Stock Market Go Up? Is an excellent resource for anyone who wants to learn more about investing and the stock market. Whether you are a beginner or an experienced investor, you are sure to gain valuable insights from this book. With its clear explanations, practical advice, and engaging style, this book is sure to become a classic in the world of investing literature. Point 1 of Why Does the Stock Market Go Up? By Brian Feroldi is that the stock market is an essential part of the economy that has evolved over time. The author provides a brief history of the stock market, starting from its origins in the 17th century Dutch East India Company to the modern stock exchanges that we see today. Feroldi explains that the stock market serves as a platform for companies to raise capital from investors in exchange for shares of ownership. In this way, the stock market helps businesses grow and expand their operations, which can have a positive impact on the economy. Moreover, the author discusses the various reasons why people invest in the stock market, including the potential for high returns, the ability to diversify their investment portfolio, and the opportunity to invest in companies that align with their personal values. Feroldi also highlights how the stock market has evolved over time to become more accessible to individual investors, thanks to the rise of online brokerage platforms and the increasing popularity of index funds and exchange-traded funds, ETFs. Overall, the author's point is that the stock market plays a vital role in the economy by providing a means for businesses to raise capital and for investors to achieve their financial goals. Understanding how the stock market works and the factors that influence it is essential for anyone who wants to invest in stocks or become more financially literate. Point 2 of Why Does the Stock Market Go Up? By Brian Feroldi is that various factors influence the stock market, and it's essential to understand them to make informed investment decisions. Feroldi covers the different types of economic indicators that investors should keep an eye on, such as interest rates, inflation, and GDP. Changes in these indicators can have significant impacts on the stock market, as they affect the overall health of the economy and the profitability of companies. The author also emphasizes that the stock market is driven by market psychology, which is the collective behavior of investors. Emotions such as fear and greed can lead to irrational buying and selling decisions, resulting in volatile market swings. In addition to economic indicators and market psychology, Feroldi discusses the impact of various players on the stock market, such as brokers, financial advisors, and fund managers. These professionals can help investors make informed decisions by providing expert guidance and advice. However, it's essential to understand their motivations and potential conflicts of interest to ensure that their recommendations align with your investment goals. Finally, Feroldi discusses the impact of global events on the stock market, such as wars, natural disasters, and political instability. These events can have significant short-term impacts on the market, but they can also create investment opportunities for savvy investors who are willing to take calculated risks. In summary, Point 2 highlights that the stock market is influenced by a range of economic and psychological factors, as well as the actions of different players and global events. To succeed in the stock market, investors need to stay informed and understand how these factors can impact their investments. Point 3 of Why Does the Stock Market Go Up? By Brian Feroldi is that diversification is crucial for investors to minimize risks and achieve their long-term investment goals. Diversification involves investing in a range of assets, such as stocks, bonds, and cash, across different sectors, industries, and geographic regions. By diversifying their portfolio, investors can reduce their exposure to the risks associated with any single investment and protect themselves against market volatility. Feroldi explains that diversification is not just about spreading your investments across different assets, but also about ensuring that your investments are not correlated with one another. For example, if you invest in a range of technology stocks, you may not be adequately diversified, as these stocks are likely to be affected by similar economic and market factors. The author also emphasizes that diversification is an ongoing process that requires regular monitoring and adjustment. As market conditions and economic indicators change, it's important to rebalance your portfolio to ensure that it remains aligned with your investment goals. Feroldi also discusses the importance of asset allocation, which involves dividing your portfolio among different asset classes based on your investment goals, risk tolerance, and time horizon. For example, younger investors with a longer time horizon may be able to take on more risk by investing a higher percentage of their portfolio in stocks, while older investors approaching retirement may want to focus more on income-generating assets such as bonds. In summary, Point 3 highlights the importance of diversification and asset allocation in minimizing risks and achieving long-term investment goals. By investing in a range of assets and regularly rebalancing their portfolio, investors can protect themselves against market volatility and ensure that their investments remain aligned with their goals. Point 4 of Why Does the Stock Market Go Up? By Brian Feroldi is that it's crucial for investors to understand key financial concepts and terms to make informed investment decisions. Feroldi emphasizes that even seasoned investors can benefit from reviewing the basics of investing, such as the difference between stocks and bonds, the concept of diversification, and the factors that drive stock prices. The author explains that one of the most important concepts for investors to understand is the time value of money. The time value of money refers to the fact that $1 today is worth more than $1 in the future, as the former can be invested and earn a return. Understanding this concept is essential for making informed decisions about saving and investing. Feroldi also covers key financial terms, such as dividends, earnings per share, and price-to-earnings ratio, and explains how they can help investors assess the value of a company and make informed investment decisions. In addition to understanding financial concepts and terms, Feroldi emphasizes the importance of avoiding common investment pitfalls. For example, he advises against trying to time the market, as this is a risky strategy that is unlikely to produce consistent returns over the long term. Instead, he encourages investors to focus on long-term investment goals and adopt a disciplined investment approach. Finally, Feroldi provides guidance on how to select and work with financial professionals, such as brokers and financial advisors. He advises investors to choose professionals who are aligned with their investment goals and who have a track record of success in achieving those goals. In summary, Point 4 highlights the importance of understanding key financial concepts and terms and avoiding common investment pitfalls. By educating themselves and working with the right professionals, investors can make informed decisions and achieve their long-term investment goals. Point 5 of Why Does the Stock Market Go Up? By Brian Feroldi, is that the book provides practical advice on how to invest in the stock market. Feroldi offers tips on selecting the right investments, developing a long-term investment strategy, and managing your portfolio. The author advises investors to focus on high-quality companies with strong financials and a competitive advantage. He also recommends investing in index funds and exchange-traded funds, ETFs, which provide broad exposure to the market and are a low-cost way to diversify your portfolio. Feroldi also stresses the importance of developing a long-term investment strategy and sticking to it. He advises investors to set clear investment goals and time horizons, and to adjust their portfolio as needed to stay on track. The author also provides guidance on how to monitor and manage your portfolio, including tips on when to sell investments, how to rebalance your portfolio, and how to stay disciplined in the face of market volatility. In addition, Feroldi offers advice on how to choose the right financial professional for your needs. He recommends working with professionals who are aligned with your investment goals, have a track record of success, and who can provide transparent and unbiased advice. Finally, the author emphasizes the importance of continuing to learn and educate yourself about the stock market and investing. He suggests reading financial news and blogs, attending seminars and conferences, and joining investment clubs as ways to stay informed and engaged. In summary, Point 5 provides practical advice on how to invest in the stock market, including tips on selecting the right investments, developing a long-term investment strategy, managing your portfolio, and choosing the right financial professional. By following this advice and continuing to educate yourself about investing, you can increase your chances of achieving your long-term investment goals. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.